Been announced that Celsius are going to be dumping a boatload of crypto assets, and that's going to definitely have an effect on the price. So stay tuned until the very end of the show, because I do have a major trade update for you on at least 2 out of the set of coins that they have, which they're going to be selling into. We're also going to do a full market update and outline what's been happening with Tether, which was one of the big stories of the day. So let's get started. And I think one of the big standout points that you need to be focusing on right now is the drop in the DXY. So the dollar index, a massive sell-off. If you look from pretty much the top to the bottom over the last couple of days, that's a 2.42% move. Remember, in currencies, that is an enormous move if you're looking at it from a magnitude standpoint. So what I've done now is I've kind of just rearranged this chart a little bit. You'll remember before we were looking at the potential of a massive W formation pattern. So that would look something like this. W formation, you're looking for a breakout if you cleared above that target of 105.78. That did not happen. Instead, price started to turn from below, which was the resistance area over here, and has since started to come back down. So what I'm viewing this as now is more of a range. I think it's best to view it as a range. We'll reevaluate if the dollar does even get into the bottom of that range of there. But you can see this area is going to be supply, which is still untapped. So eventually the dollar is going to move back into this area. The point of why I'm telling you this is because if you can correlate this with reaching a support level while simultaneously Bitcoin is reaching a resistance level, you have a trade opportunity at play. So keep an eye on that. That is the DXY. The S&P 500 continues to be relentless against the bears and continues to push on up. We now, since the last touch of the trend line to the top, 9.15% up. And if you look at the push into the gray box territory, you're looking at just under 2%. So just over 1%, just under 2% before you hit that next major resistance. And then the question is, what happens next? I would not want to be going long from this level into the gray box territory. However, I did say multiple times before that the S&P 500 is in fact still bullish. You can't deny the trend. It's higher highs and higher lows throughout, and it's continuing on up. As you can see over here, we are now missing our next higher low. We have a major higher high, and the S&P 500 continues to soar on up. Expect that at some point, even if it does push through this level, you're going to have a major pullback, probably into this 43.27 level, which is the major prior liquidity, which is yet to be tested. It also happens to be the range high. That would be a level where if you are a stock market trader, you can look to start to establish a position. Remember, for the crypto bros out there, we don't often trade stock market related tickers, but if you do want to, there is PrimeXBT. I have now responded to all of you with regards to the 20% sign up bonus. You should have that in your inbox as of this morning. I have 4 codes left. If you do want those codes, if you're somebody that doesn't have an account yet, check the link in the description below of the YouTube description. Go to PrimeXBT, click that link, sign up, make a deposit, and then send me a DM on Twitter and I'll give you the link. It's going to be first come, first serve for the final 4 links that I have. And then you can trade the S&P 500 when it does come back down here. You can go long on that. All right, moving on. If you look over here, though, we are coming into that interesting spot. Remember that we don't have historical data on this, but it is something on our watch list, which is pretty interesting. It's the S&P 500 divided by the M2 money supply. And anytime we've come into major resistance levels, you see a big sell-off following that .com crash, 2008 financial crisis, black swan event from COVID, 2021 highs, and now we're coming into the unknown territory. So I've never looked at this chart before. I don't know what's going to happen, but I find it interesting because we're obviously coming into major resistance as well on the S&P 500. So we'll be watching that. The decorrelation continues to persist, whereby you see the Nasdaq and the S&P 500 continue to soar and Bitcoin continues to drop. Now, that really started to take place around December. Yes, the Bitcoin price did rally in December, but that's where the decorrelation started to take place. And you can see it's now bigger than it's ever been before, and we'll be looking for this to at some point converge. When that does converge, you might get a bid on Bitcoin, but that is the whole thing, is which one is leading. Now, usually Bitcoin tends to lead these moves. So could it be that Bitcoin, having turned down from its 30K level, which is around about here, and coming down, could mean that the S&P 500 could follow that? Well, if you do look at the resistance level, I mean, that is what it's indicative of. It does suggest you can hit resistance and start to pull back. So we'll focus on that next week. There is another decorrelation taking place, and that is if you look at the Nasdaq, the NDX is now beating Ethereum on a year-to-date basis, which is also pretty rare, something that you don't expect to usually see. So creating another divergence within the crypto markets against the traditional markets. Ethereum has broken below the mid-range. We identified this already over a week ago as a possibility, and now it's holding under here. I would be looking for this to continue down towards 0.0624 satoshis. That's going to be the 0.25 level of the overall range for the ETH BTC chart. So basically still a bit more down pressure on ETH. And if you look at Benjamin Cowan, he outlines this using his Into the Cryptoverse tools over here, looking at the Ethereum peaks from before. And he's basically said over here that it looks like it's rolling over around the exact same spot that ETH rolled over in 2019. But what I want to outline over here is when it did roll over, the blue line denotes the 2019 ETH rally, or at least, or the ETH sell-off going into the bear market, and the red one denotes basically this cycle's one right now where we're at. You can see that ETH didn't take out the lows, so it is possible that maybe ETH will make another major higher low, and this could still form some sort of a Wyckoff accumulation phase whereby it could be an opportunity to pick up some ETH. Those levels that I'm eyeing out is anywhere between about 1,100 to 1,400, give or take. Those are the major support zones. Obviously, playing at level to level, right? If you lose one level, then you now start to look down to the lower zone. Okay, total, I would be looking for a little bit of a reaction into the mid-range over here as depicted by the yellow lines. So some sort of a push maybe below that, a little bit of a recapture of that line, maybe a dip below one more time, and then a bigger push up, which will form the next lower high. Remember, you got highs, lower high, and then you'd be looking for the next lower high somewhere around that 100 or let's say the 1.075 trillion level, somewhere around there, looking for total to form a lower high and then probably continue down at a later stage. What about total 2? How's that looking? Well, it's still continuing to downtrend, falling off of a cliff over here. Again, eventually there will be a mean reversion, right, where there's going to be a snapback. The snapback is going to be a lower high, and it looks exactly the same on total 3 over here, coming into the prior, what was our major range that we were holding, the orange level, 101. You can see bulls trying to defend that level. Expect that any push up into this zone over here, the prior mid-range coming in at 350 billion is going to be another lower high. There's your trend line coming down, reject off there, and then ultimately that would be major capitulation zone at 233 billion for total 3. Okay, let's move on. Bitcoin over here on the 4-day time frame, we did obviously go below the breakdown level, but we're yet to close there. So if this candle does start to close back up, great. It won't be looking too bad, but it's still not enough for me to take a position on. As I've mentioned to you guys before, it's really as simple as this. You need to break structure, right, on a higher time frame. So you need to get above 28,000 for Bitcoin first, make a higher high, and then you can buy the next high low or the consolidation above that high, or you need to come into the demand zone, which is 23,907. Anything in between there as a swing trader, I'm not interested in, and I wouldn't be looking at. If you look at the moving averages, you can see they are starting to cross over in a very bearish fashion, right? You have the short below the medium, so the yellow below the green, and then you have the purple, which is still trending up, but it's slowly starting to turn over. Let's just quickly remove the drawing so you can see that nicely. So it's important when you look at moving averages, high time frame ones, you focus on the posture of those moving averages, right? That gives you a lot of valuable information. If this moving average, the purple one, starts to roll over and turn back down as well, while simultaneously you have the short below the medium, below the long term, and price consolidating underneath all of that, that's signifying that you have a strong trending move in play and you'd be looking for low prices. So always remember that when you're trading, as the purple one is the high time frame, it is still holding up, which means technically speaking, bulls have a little bit of hope left, right? That's their final leg. Once that crosses over, then it's going to be going down. Tether, right? Yesterday there was a lot of Tether FUD, right? This comes around every cycle and it has for many, many years. Eventually there is a possibility that it's going to turn out to be true and the whole market is going to nuke, but was yesterday that day? Well, not really. If you look over here, the Tether Depeg, this is usually where Tether would oscillate anywhere between 9992 or just over the $1 mark, that means that USDC would usually be losing market share against Tether. And it's very simple. Just put it on max over here. If you look at the market cap, and then let's just go a little bit, let's say from 2016, look at the prior times, the prior scares that you've had in the Depegging. The probability is just low. And look at where we were dealing, what we're dealing with now at the moment in relation to 2017 to 2019. There's hardly been any scares in the past few years. Tether continues to at least appear to remain strong. But there are other guys, 𝗕𝗆𝗄𝗧, who's come out over here, and he says that Tether is next, says the short seller who bet against Silvergate and Signature Bank. He is one of the guys, fair enough, who did call the Silvergate and Signature Bank collapse before the time, quite a while before the time. And he's saying he's now betting this is the next domino to fall. If you do want to go and read that, go through to his link over here on Twitter, and you're welcome to read that. I did the hard work for you, or should I say ChatGPT did it, and I summarized it. Too long, did not read, suggests 𝗕𝗆𝗄𝗧 is a bearish investor. Key point, he's bearish investor most of the time. And he's a short seller. He's expressed concerns about Tether, the leading stablecoin issuer. He points out that Tether cannot provide audits or verification to prove the backing of its stablecoins, and its quarterly attestation report is deemed insufficient for due diligence. 𝗕𝗆𝗄𝗧, who correctly predicted trouble for Signature Bank and Binance, believes that Tether could face a similar fate. He connects the dots between the crypto-friendly banks that Tether and Binance have used and expresses skepticism about their practices. Critics have raised concerns about Tether's short-term assets being insufficient to back its stablecoins, particularly the dollars backing them. Despite regulatory scrutiny and market volatility, Tether's USDT stablecoin has solidified its dominance within the market. Remember, we looked at that dominance, I think, on a show 2 days ago. It was, 2 days ago. And the dominance was huge, right? They have 50% of the market supply, which is enormous. 𝗕𝗆𝗄𝗧 argues that the crypto industry enables money laundering and criminal activity using caution and vigilance among investors. We also covered that 2 days ago, and I told you that if the SEC really did want to go after things like this, or the US wanted to stop Tether, I mean, theoretically they could. They just have to prove that there was nefarious activities more than once on US soil using US dollars, and then pretty much they can ban Tether within the US. So it is always going to be a risk, but similar to what's been going on with the other crypto assets, ultimately they move, right? They just move offshore. They might take an initial knock, and then ultimately you would expect that they'd bounce back, or other stablecoin issuers will start to take main market share. So what does that mean for you as a viewer? And you're scared, you're panicking. Ultimately, it means that you always need to mitigate your risk, right? Don't have more money in crypto assets than what you can afford to lose. That's as the saying goes, right? Don't ruin your life. Don't be all in on crypto. That's rule number one. Rule number two, I would say disperse your crypto assets, right? So have some of them in 𝗓𝗏, have USDC, have BUSD, have a Gemini stablecoin, have USDT. By dispersing it across multiple stablecoins, hopefully that will change some of your risk. And then ultimately Bitcoin, right? Bitcoin typically tends to go up over time and is meant to be a safe haven asset if you look at it on a large enough time horizon. So you could store some in there. That would be my advice. I don't know if I'd get too fancy with trying to short Tether against USDC and all of that. You can find yourself in a lot of trouble paying high funding rates if you do such things. Okay, next. Now, this is pretty much what the whole show is about. And if you look over here, what's been going on with Celsius, Andrew Kang, who's a big whale trader, and you can see his trades publicly, he says, contagion from Luna is still rearing its ugly head. Celsius estate is now set to dispose a truckload of altcoins. So the altcoins being mentioned, there's a couple of them. I'm going to give you the list now. But Solana, MATIC, and Cardano are some of the big ones. 𝗏𝗏𝗏 trades, also a big trader. Voyager was nuking some stuff earlier today. Celsius felt sidelined, he says, and we haven't confirmed this yet and are not identifying any movements on chain so far. So I know that we're looking for somebody, if you read further into his thread, he is seeking out for somebody to create a dashboard whereby we can properly track these coin movements. So if you do know anyone that can do that, here you have it. Look, he's giving a $5,000 bounty for anyone that can identify all of Celsius, Cardano, MATIC, and Solana Litecoin and DOT wallets, because then you can track the wallets to see, right, if they're actually moving those coins out and starting to liquidate them. And then basically said bonus and a job offer if you can actually build a tracking tool for them. So one of those Dune analytic dashboards would be great in a scenario like this. Keep an eye out, read his comment section over there. I'm sure he will announce if something like that does come out, and then you're able to track that, right? So far you can start to think already ahead of time that this is only going to start to price in from now onwards. They set to sell them on the 1st of July, which is in about 2 weeks' time. But already it's probably going to start to get priced in, which means you need to find your trade set up sooner rather than later. Ali says over here, MATIC and Cardano hodlers are in shambles, right? They've been tagged as a security in 2 lawsuits on the same day. Forced selling now by Robinhood as well as Celsius because they're being delisted. Remember, they're being delisted from these big exchanges. So you're basically pulling the entire bid out. There's no demand for these coins. If you start to delist it from major exchanges within the US, the bid is being completely removed, and that creates no support underneath, right? So it's quite a dangerous situation for those coins. And I'm not obviously wanting to gain any profits or pleasure out of you guys as viewers who may be holding these coins. I'm just outlining the risk, because the reality is it is quite a scary situation. So here, if you look at an Apes Prologue, he says, yeah, today Celsius announced that it will sell all altcoins from its customers starting from July the 1st, and then they're going to convert that into BTC and ETH. So the safe havens of crypto, right? Coins are going to probably move into that. The total altcoin sell pressure amounts to 215 million. That is enough to create a continuation of the liquidation cascade towards the downside. It's a real possibility. And here you have the outline, right? These are all the different coins. Celsius token, obviously, MATIC, Cardano, Chainlink, Litecoin, DOT, Bitcoin Cash, Aave, BNB, Uniswap, XLM, which I believe is Monero, Solana, EOS, which was the old ETH killer from a previous cycle, and then FTT and Serum. Those are the tokens which have basically been listed. And then again, a reminder, $215 million worth, which is enough to move the markets, right? So 𝗕𝗆𝗄 says over here, if he retweeted Celsius, so you can see that's from the Celsians official page. And they say Celsius will be selling all altcoins from all customers except custody and withhold accounts. And then that's going to start on the 1st of July and converting into Bitcoin and ETH, therefore confirming that it's most likely true. So there's the trade setup, right? First one's first. Solana. Okay, Solana, unless there's a deviation back into the range, which is why my stop loss is placed where it's at, because if price does reclaim back above this pink zone, well, then you're breaking back into the range, and then you may end up having just a big deviation like that, right? Then you could see a deviation, and then it's going to squeeze a lot higher. So I'll zoom in. This is kind of what I'm looking at more or less. I'm looking at basically this candle, which led to the markdown phase or the big sell-off over there. That level I wouldn't want to see cleared. So I've got the stop sitting at 1757. You can see on the right-hand side over there. Entry would be any push up over here. I'm expecting in the short term still a little bit more of a short squeeze, right? The short squeeze, it's not really a short squeeze. It's more just shorts who are taking profit on their in the money trades. Obviously, you're going to take a little bit of profit, and that's going to send price up a bit higher. And then I think they're going to reload into that. Okay, so pushing up into this over here. If you want the last 2 trades, you got to give me a like. I have 291 likes, over 1,500 of you live, almost 1,600. Smash the like button, hit the bell notification, and subscribe to the channel. Let's get those likes up, and then I'll show you the other trades as well. Okay, but let's continue on over here with Solana. Again, looking for potential push up into this underside resistance. If you start to see a bearish rejection from there, that confirms the trade. So you don't just blindly enter here, guys. If you see this, you don't just go short right now at 1487. Wait for the reaction. Wait for price to push up. It might push up even a bit higher. It might go like this, something like this. Then you can get a better entry, right? When you start to see the weakness, you now know, okay, trade's on. Stop goes above, enter, and then you're looking to play that all the way back down, right? Mid-range TP, so in the middle of this level, first TP, and then last TP would be here. I'd probably do that in thirds, right? So TP 1/3 over here, second third over here, and then I usually would leave on something like this. If it can break that low, then it's really going to get heated. It's going to go down very quickly, and then you can take the final third at the next major support level on Solana. But that's not going to happen today, so I will re-identify that when the time comes. We need 40 more likes, and then we go into the next ones. 40 more likes. You know you want to do it. You know you want to do it. Okay, guys, let's carry on. MATIC. Let's go into MATIC. Here is the MATIC trade setup. So again, if MATIC, I just want to mention quickly as well on Solana, based on the stop as well, obviously if price retraces this full bearish candle to the downside and it gets back above, you know the trade idea is wrong, and then you kind of V-shape recovering out of here, deviation back above, and then it opens up more the opportunity to go long as opposed to short. So that's the thinking of that. I am looking at this candle on the left. Now, same thing over here. Let's look at MATIC. Similar concept. MATIC, there you go. I wouldn't really want to see MATIC get back above this candle over here where these wicks are. So basically anywhere that you can get your entry in around the 61 cent zone, I think is a pretty good entry for a short. Stop loss goes at 69 cents. So anything above 69 cents, I would just cut that position. This one, be a little bit more cautious on. You kind of want to scale into this position. I wouldn't want to go enter in full force onto MATIC over here, but ultimately looking for that to do the same thing, something like this, and then maybe it slowly starts to bleed out. It might take some time, but over the course of leading into July, you get the full trade to play out. So this is not a high leverage trade idea. These are more low leverage trade ideas, and both of these trades are giving you a decent setup, right? A risk to reward of 3.78 to 1, and Solana is giving you a 5 to 1 risk to reward setup. Cardano is a little bit less clear for me at the moment. I don't really see a great risk to reward on shorting this one yet, unless I get a major spike up. So I haven't drawn anything in there, but you can see, right? Cardano is holding this channel towards the downside, parallel channel. You got your mid-range. Price is reacting off of that nicely. Look at that. Look at those wicks that came into that level. Let me just zoom that in. There we go. Look at the wicks that came into that level over there and rejection from that point down. So unless I see a bigger spike that comes into the underside area over here to test that as resistance, and then I'd look for weakness. Maybe there I could reestablish another short. Stop goes above, or maybe you get a real squeeze which comes into the 200-day moving average like that. Then that would be a high probability trade setup. The point is you want to have these on your watch list in case the market does not flip into a healthy stance, right? If the market continues to be bearish, these coins are probably going to bleed out more because any bounces that take place, Celsius are going to liquidate into those bounces. Okay, next, let's move on. Let's go into Bitcoin over here. Bitcoin is situated exactly at the pivot level. Was this the dip? Is the dip over? I don't think so. If that's what's wondering, if that's what you're wondering, I don't think that it's over yet. I still think a tag of the 200-day moving average is highly probable. And the question is, how do we get to the 200? If we get there in one rapid candle, then that would be a high probability trade, right? Because the velocity of the move is important. I may as well give you a free lesson while we're here. So let's quickly draw this out. Just imagine that is the support level, right? And this level has not been tested for quite a long period of time. Let's use a pen. So let's do it like this, actually, because it's a moving average. Pretend this is a high time frame moving average and it stretches over time. This works for diagonals, horizontals, moving averages, EMAs, anything that's typically a strong level of support. The velocity of the move is important, right? So if you see price coming down at a rapid velocity with a strong angle to the downside, more than 45 degrees, when it hits that level, more than likely you're going to get a strong reaction, right? If it comes into that at a slower angle like that, you're not going to get an as big move, right? Think of somebody, I don't know, shooting a bullet at I don't know, what, a pole or something on the ground, and it's going to bounce like that. It's not going to hit the thing and just go straight up like that. It moves kind of in the same direction, right? So it's very simple. Think of it like a science project. You're throwing a bouncing ball into a flat surface. It's going to bounce straight back up with almost equal magnitude in the other direction. But if you throw it at an angle, it's going to hit it and it's just going to bounce softly like that. So that's kind of what you're looking at, right? So the point is it depends on the velocity. If you come into this aggressively, and so far the angle is pretty aggressive, right? If you look from here, coming all the way down into a strong level, you would think that that's going to give you a big reaction at the 200-day moving average. So still waiting for that. But if you grind into that level, so let's pretend the 200-day moving average is slowly moving up like this. If you're going to slowly grind into this level like this over time, ever so slightly, and then it meets that, I don't know if I'm going to take the long trade. I'm not sure you're going to get a huge reaction. Then you might just get something like that small, and then it's probably going to roll over and break through that moving average. And that goes the same, right? Again, remember, diagonals, horizontals, moving averages, EMAs, it's applicable to anything that would be a support or resistance area. Okay, what about Ethereum? Ethereum has come into the 200 already. Remember, Ethereum for the last couple of weeks has been leading Bitcoin both to the up and the downside. So if you look at Ethereum over here, technically you do have a trade setup. I mean, you could go long over here. That's enough of a reaction for me to go long, at least for a little bit of a bigger bounce. What you don't want to see over here is a consolidation, because if you have a consolidation, it's the same as this, right? Big move down, impulsive move down, consolidation creates a bear flag, right? Big move down, consolidation, that will create another bear flag, which would lead to the next leg down. So be cognizant of that. But technically speaking, from a pure TA standpoint, of course, this is a trade setup. You would be going long anywhere around this region, stop loss below there, and you're longing back into what would be your next resistance. That gives you still about a 1-to-3 risk to reward ratio, longing into the 200 EMA as well as the 9 and the 18 EMA, which is currently trending down and acting as resistance. Okay, Bitcoin over here on the 4-hour time frame. The stochastic RSI has reached to the upper side again. Every time this has been a trend line regression where it's pushed into that and rejected. That's how we kind of got this top over here. Sometimes the stochastic RSI works well, sometimes it doesn't. So take it with a grain of salt. Point is, you're coming into the 50 and the 200 EMA, which has been pretty rock solid in acting as major resistance on the short time frame for quite some time, right? So it keeps coming down, and ultimately, again, same thing, you're looking for a test into that 24K level. So not much has changed over there on Bitcoin. Very low time frame, day traders, guys who are looking at price action today. There's a couple of scenarios. I'm going to give you the scenario now, but one is we were stuck within this range. I put this on Twitter, I put it on the show yesterday, and I put it in the Daily Candle newsletter. I told you expect there's probably going to be a deviation over here. The question is, do you reject from the bottom side of the range and come back down, or do you hold above and break convincingly into the range? So far, you are in the range as long as you're holding above this 25,351. There is a possibility that you have a range trade at play over here where it could start to move back towards that 26.3, 26.4 in the mid-range level, and then your range highs at 27.4. I'm going to outline to you how this lines up with liquidity as well. Look at the downtrending or downsloping trend line over here. It is also going to be resistance, but this is also where a lot of guys went short, which adds that upside liquidity. So if you look at this move, I just want to re-emphasize how this move was mainly driven by shorts who were just closing the position. So 𝗬𝗏52 says over here, 52 𝗬, says aggregate CVDs and delta. Perp CVD divergence is playing out so far with shorts cutting their positions. Spot bid has been pretty meh so far. So spot traders are still not chasing price over here. This is really a leverage-driven market at the moment. And look over here, look at the drop in open interest, right? As soon as the open interest dropped, price started to move up. Why did that happen? Well, it's indicative of exactly what he said. It's shorts who were leveraged up. They were shorting to the downside, right? Building up their short position, up, price trend down. And then as soon as they were like, okay, we're happy with our profits, let's start to close those positions. They close, the open interest drops because that's the leverage dropping, and price goes up, right? Now they're looking to probably reload. So you have to be careful of that. Where are they going to reload? You can see again, the delta over here, cumulative volume delta, the shorts dropped off significantly. These last guys are probably going to get squeezed out. It's going to flip green again. It's going to come into this region over here around that 26.4 level. And that's where these smart guys who were shorting, they got the whole move down. They're going to be looking to reload on that short, right? So they're probably long right now. And that would look something like this for Bitcoin. So if you're a degen and you want to play the long side, if you see a pullback that comes into this 25.4 level, 25.4, 25.3. Remember I said as long as it holds that, then that's showing a possible breakback into the range. Technically, you have a long trade from there back into the resistance trend line over here. Small trade, but it is a trade nevertheless. That's where there's going to be a trap, right? Liquidity area is stacked over there. And then your stop is going to be up to 26.3. So then you could pretty much flip short. Follow me in the Discord if you do want updates as it goes on, like as these things unfold, then you'll need to go into the Discord. We're watching the volume carefully as well. To get into the Discord, use any one of the exchange links. That is your key to get access into the Discord private group, and then make a small deposit and you'll be in. So here's the liquidity, right? Big push up into that just under $26,000. That's going to be a trappy zone. Liquidity is going to be grabbed and you're probably going to move in the other direction. I think I answered everything. Is there anything else to answer? Good time to buy, Aru says. It depends how long you want to hold for, but it could be. Let's just check the comments. The school is coming bit by bit. I see Bangkok Bert says we want Kyle's school. Wales School is the name of the school. It is coming out. I'm busy recording bit by bit. That's why the other day, I think I was late because I was prepping for Wales School, or I was late on, that was it. I was late on giving you the prime codes because I was busy with Wales School. So I'm doing more prep work. I think I've done like 2 or 3 lessons and there's about 14 or so episodes. All right, guys, that's it from me. Smash the like button, hit the bell notification. I will see you all on the next one, which is going to be on Monday. Have a fantastic weekend. Remember, liquidity is low out there, especially over the weekends, which means that if big players want to move price, it's very easy to do it. Any small bids that come in will send price soaring, and any asks that come in will send price crashing. So don't panic over the course of the weekend and don't get wrecked on the weekend. I will see you all on Monday. Have a great one. Cheers for now.